Good morning, everyone. Hello, everyone online. My name's Josh Hakki. I'm a financial advisor with Enver Wealth Management, senior part of the practice of St James's Place. And today, as by the generic title, I'm going to be doing a brief sort of financial advice presentation. Now, the aims of this session are really simple. Firstly, to show the ways in which financial advice can benefit both individuals, but also SMEs, limited company owners, and then also just how to show how business owners can become more tax efficient and just show how they can really use their limited company to make effective use of their investments, their cash, their funds. So first things first, I want to talk briefly just a little bit about the importance of financial education. I'm not going to show all of these stats and talk all of them through, but what I am going to highlight is really simple. That first stat right there, 40% of UK employees have said that financial concerns were their biggest worries in 2022. Just want to let that sink in a little bit. What that means is that your employees, whether you're a limited company owner, an SME owner, or you are an employee yourself, there's a high chance that at some point that was their biggest worry. And today, the point is to talk you through how working with a financial advisor can alleviate those worries and benefit you, the business owner. Now, first things first, I want you to meet three characters: Sophie, Callum, and Sam. Now, these are very generic characters. It will all start to make sense who they are. But what they really are here to illustrate are the different approaches people have and the different ways in which people take an approach to their finances. So let me get straight to it and it will really make sense what I'm getting at. So first things first, Safe Sophie. Now, who is Safe Sophie? We all know a Safe Sophie. All of us probably have a part of Safe Sophie in us. What Sophie is the more kind of conservative investor. She's quite risk averse. Her main priority is getting her mortgage paid off, having her house safely, building up all of her excess funds into a cash deposit. Now, first things first, there's nothing wrong with Sophie. In fact, it's a very, very understandable approach. Many people are risk averse. Not everyone wants to throw their money into the stock market, invest everything away. People like to feel safe and secure. There's nothing wrong with this approach. There are, however, some shortfalls that I will highlight a bit later on, but for the most part, this is really just to highlight that everyone has a bit of a Safe Sophie in them, or you may know a Safe Sophie. Really as simple as that. But her goals are all the same. Modest expenses, maybe even conservative, doesn't spend too much. Her medium goals, let's get that mortgage paid off, let's climb the corporate ladder, and let's retire, in the long term and spend time with the family. Really as simple as that. Now, this next person I'm going to introduce, we all know a carefree Callum. So, a carefree Callum is really simple. He spends a bit too much, probably more than he should. He has an expensive and kind of inefficient use of his cars. He likes his luxuries. Now, we never want to take that away from anyone. We always want people to enjoy themselves. But he doesn't spend a lot of time considering saving for the future. In fact, his main priorities are, his lifestyle, traveling, going out with friends. These are all things that we would never want to take away from Callum. But what Callum hasn't done is created any medium or long-term goals. He lives in the now. He's instant gratification, wants to live for the now. And there's no issue with that. In fact, I'm sure all of you have heard a phrase before uttered by them, I'll probably be dead next week. I can't spend it while I'm dead. Those sort of attitudes. Now, the average life expectancy in the UK is 80, so not everyone can die next week. And so, financial advisors like myself always like to give a kind of measured approach, that we plan for the future. We are more proactive rather than reactive. And you'll start to see some of the shortfalls of Carefree Callum a bit later on. Next up, however, we have Savvy Sam. Now, obviously, Sam is just he's the ideal client. Now, when I say ideal, it's not mean that he's right nor wrong. It's simply the place we like to get our clients to because it's where we feel they can benefit the most. So let's break down Sam a little bit. First of all, Sam's always been proactive on the property market. He has, maybe a property portfolio all within an SPV. His mortgage is being paid down. He's sort of modest in expenses. He still enjoys himself, still goes out, still travels, still does things with friends, but he also allots a certain amount of his money or his disposable income into investments. He takes a proactive approach. For example, he keeps an eye on his investments portfolio, aims for diversification, actively engages in having his money work harder for him. As you can see, he does have medium-term goals and long-term goals. His medium-term goals, build that property portfolio. His medium-term goals, get those investments growing, get his money working harder for him. But his long-term goals are exactly the same as Safe Sophie's. But more than likely, despite the fact he's probably more of a risk taker, he's likely going to be in a better position simply because he took a proactive approach earlier on. Now, I'm not here to paint the sky blue either. I'm not here to tell you that investing is the easiest way and there's no risks or anything like that to it. But what I do want to cover is just some key areas for consideration. Some pros and cons to investment, but also more importantly, the pros and cons to the approaches we've just been through. So let's take the first, for example, the cost of inflation. Now, Safe Sophie has all of her money tied up in the bank. Let's say she had £10,000 in the year 2000. In the year 2023, the buying power of those funds, half. Well, just a bit above half, 5,000. Inflation is wearing down your cash every year. And with almost record level inflation recently, this is even more impactful. So, what is it that we can do? Investing. Now, when I say investing, I don't mean let's throw all our money in Bitcoin, not really where we try to aim. But what we have here are just some tips and a little bit about the risk spectrum of different asset classes. Now, I don't want to go through all the tips, but I just want to highlight two. The first is time horizon. So when I say time horizon, think about how long you have to invest. If you want to retire in 5 years' time, 10 years' time, you want a car in 15 years' time, you want your children to have £1 million in 100 years' time, whatever your situation, each can have an impact on how financial advice is tailored to you and what kind of approaches we take. The second point I want to bring up is a personal favorite of mine, super cheesy, we love our generic little phrases in finance, is that it is not timing the market, but time in the market that is important. Now I want to highlight this using one of my favorite graphs here. Let's say, for simplicity's sake, you invested £100,000 into a world index fund 20 years ago. Let's say that's all you did. You would have about £654,000 now, give or take. Let's say instead though that you took a bit of a timing approach. You tried to time the market, get the best days, use your financial knowledge to really try and beat the market. Now, I'm not saying it's not possible. I believe everyone is capable of this, but finding the time to do it is the real struggle. But let's say you missed it. One day you're too busy and you missed one major point. By missing just the 10 best days in the market, your fund is now worth only £300,000. You lost half by missing 10 days over 20 years. It's really as simple as that. Now, it's not to say that you should never then try to invest yourself or that you should never really take an active approach. If you like investing for yourself, we always encourage it. In fact, it's an element that we always like to say that our clients should maintain. People enjoy it and we never want to take that away from you. But just how you wouldn't necessarily take the entirety of your health into your own hands, sometimes you would go and see a doctor for those more specialized areas or to just take on maybe the more important aspects of your finances. Really, that's all we are. Now, to touch upon time horizon, I just want to highlight a really quick example of why time horizon might be so important to yourselves. First of all, compound interest. So when I say compound interest, that's simply investments that essentially reinvest any returns such as dividends. Now, I told you all about Savvy Sam earlier. Well, Sam, very simply, took a proactive approach to his retirement and started earlier. What's the impact of that? Really simple. Let's say that Sam invested £200 a month and then every year he increased that amount by about 2.5% and he had a kind of modest yield of 5% a year return. If he started doing that at age 20, at age 68, he has £725,000 in his pension. Let's say instead he delayed it 10 years. Started at 30, £387,000. Let's take that one more time. He delays it until 40. Now it's only £193,000. He's lost, if my maths is correct, about 70% of the value just by delaying 20 years. If this doesn't highlight the importance of investment horizon, not sure what will. This isn't to say that if you haven't started, it's too late for you. It just means that you're likely going to have to commit more funds or take a more active approach. I've known plenty of carefree Callums who hit 50 after saying, 30 years I'll die next week, and now they think they probably are going to live, so now they need to start committing a lot of funds to their retirement. But these are all parts of working with a financial advisor. And if you really, just to hammer it home, the point on kind of time horizon, really simple. Why investing makes sense. This is a personal favorite document of mine. So you can all see those little lines. I'll explain them in the simplest ways. Blue line is equities. The purple line is fixed income. The red line under that is properties. Now what this is essentially showing is the growth of value. If you had £100,000 invested, I believe it's about 30 years ago, how much it would be worth today if you were invested in just those asset classes. As a disclaimer, we would never invest you in solely one asset class, but what this does highlight is that over a longer term, even with all the massive drops you can see, I'm sure you can see COVID, I'm sure you can see where the Ukraine war started, benefiting from time will allow your funds to weather any storm, and so keeping a longer term investment horizon is the best way to manage your funds and have them working for you. Now, the value of working with a financial advisor isn't just in investments. It's oftentimes where people talk, but it isn't the only way. But here's the area that I always like to highlight. Contingency planning. I'm not going to read all these questions out. In fact, I'm just going to highlight what the point of them are. The real value of a financial advisor is in having thought-provoking conversations. Now, when I say thought-provoking conversations, I mean bringing up the questions perhaps that you haven't wanted to ask yourself or have been too afraid to ask someone. It's about having an advisor who you can go to as a second opinion, your kind of guide through the financial world, which is ever-changing and oftentimes can be quite intimidating, understandably. So when I say contingency planning, the very top question is really simple. Let's say you've got 2 earners in your family. Could you survive with just one person's income? What would happen if you only had one person's income? How would you support yourselves? Could you turn to friends and family? These are all questions that we're going to ask. And to really highlight this, I'm just going to give a quick hypothetical. Now, just follow me with this really simple example. Let's suppose you had an ATM in your room, in your living room, kitchen, wherever, and it produced all the money you needed to live day to day. There is nice little animation. Now, if I asked you to insure this machine, just ask yourself, would you take it? In fact, I'll go one further. Let's say that I agreed that the newer and earlier you took out this insurance on the machine, the cheaper I'd give it to you. Now, in a very, I'm sure many of you have worked out by now, in a not very Shakespearean twist, you are the ATM. We spend our lives insuring our phones, our houses, our cars, but we don't insure the most important aspects of our lives, which is ourselves. And speaking with a financial advisor is about addressing these areas where perhaps you haven't wanted to, or perhaps you've just been curious about discussing. Now, my areas of advice are in no way limited. This is the wheel of solutions, so it covers many of the areas that I actually advise in, and any areas where we may go to an external referrer essentially. But what's important is that for many people, they want one point of contact for all of their financial needs. That's a large part of our value as a financial advisor. That's where we really bring the power of financial advice. Now, finally, just a few things to remember. First of all, any financial planning, while everything I've said today is very generic, could be applied to anyone, is always going to be tailored to you as an individual. We are always going to be placing the focus around what your goals are. It's not what other people's goals are. It's about how we can help you and your family work together. Now, for a big section that I'm sure probably many people have been looking forward to or actually here for, we have our SME and limited company solutions. Now, when I say limited company solutions, the word solutions really just refers to the ways in which we can have your money as a limited company owner work harder for you and work better. So what do I mean by this? Well, first of all, there is just a quick point, but more importantly, these are the areas where I work with my current client base and the areas in which your business can be helped by a financial advisor. I cover all of these areas, and these are all areas where I work with clients. But as I'm sure many of you can see, there's also a section that says you and your family. The reason that I've done this is very simple, and the reason why we always encourage this is simple. Many people, as a business owner myself, I'm liable to it. We see our business and our personal lives as separate. That's the business, that's the family. They're two different things, two different lives. When it comes to the finances of both, however, they couldn't be more interwoven. So what do I mean by that? Well, think of it as simple as this. When you're looking for ways to get money out of your business in a more tax efficient way, what are you really trying to achieve? You're trying to get it more efficiently to you and your family. When you are passing on assets through your business, passing it on to the next generation, what are you doing? You're passing it on to your children, your family again. This is where there's a real interlink between the two, and it's where the real value of speaking to a financial advisor can occur. Now, key areas of interest. I just wanted to highlight four. These are the four most common areas where I speak to limited company owners. It's by no means the whole extent, but what it really does show is the kind of main places whereby value can be added immediately and very simply. So, first of all, we have pension planning. Now, I know a pension is for you and that's nothing to do with your business, but as a really simple bit of information, pension contributions via your limited company can be one of the most effective ways to extract money out of your business. And not just that, it can also help to protect those funds against inheritance tax liability, which as business owners may be a problem for yourselves. Next up is protection planning. Now, again, we're back to the ATM. You have your life insurance, corporate protections, private medical insurance, maybe even just employee benefits. All of these are areas which I do advise in, and they're also areas in which sometimes can be the most efficient way to take out such protection. Many business owners, in fact, aren't aware that they can take these sort of protection. And in fact, to build on this just a little bit more, let me just give a quick question to everyone in this room. If I were to ask you, where does your, were you to pass away, how would your family survive? You might say, my limited company will take over. It's perfectly fine. But my question is really, really simple. If you can no longer work and your business has now lost you, is it going to be as efficient? I'm sure you all add a massive amount of value to your business. Can your business actually afford to run the same way without you? There are protections in place that can help cover this exact scenario, and many people aren't aware of it. Next up is estate planning. I touched on it a little bit there with sort of pension contributions, but again, businesses can be such an effective way to really extract funds effectively and have them working for you much better. Next up, corporate investments. I threw this one in as a little bit of a bonus. Now, when I say corporate investments, I would really want you to just cast your mind back to Safe Sophie. Name forgot there. And Safe Sophie has a lot of her money in cash. A lot of it is sitting there eroding to inflation, which I showed you. Now, obviously, you always have to have your funds to cover yourself to make sure your business is protected. But the excess, there are actual ways that you can invest that money to have it working for you so that you are essentially having your money work passively rather than being eroded by inflation. These are all things that can be done and can be discussed. Now, we've covered a little bit about how I can work with you as the business owner, but how can I benefit your business as a whole? Really simple. I want to show how not working with a financial advisor, or in fact how financial well-being can have a negative effect on your business. That is why this is so important. First of all, 13 million days of work were lost as a result of 2.5 million private sector workers taking time off. Just let that sink in for a bit. In fact, I can give you the numbers. It costs £192 per day per employee to not have your employee come into work due to these financial worries. If you cast your mind back to the first slide, 40% of them said it was their biggest worry. Let's take it a step further. £2.5 billion was the total cost of absenteeism. So that's employees not coming into work. So you can even build on that. There's something called presenteeism, where someone is present, but due to worries, they're not working as effectively. We've all had days like that. But that brings the cost up to 6.5 billion. So my question is really simple. Can you afford to allow this financial well-being to not be addressed? That's where we come in. So at Enver Wealth Management, we offer a few solutions. Now these solutions vary, but what's most important is that we offer both generic and bespoke workshops. So what do I mean by a workshop? Really simple. I can work with you as the business owner, or just essentially come in, give a few sort of online, in-person sessions, and in these sessions I'll address much of what we've spoken about today, whether it be covering themselves for protection, their investments, how to plan for the future, what steps should they take, and most importantly, just any questions they may have. By answering these questions and starting to put your employees' worries at ease, you will start to see a marked improvement in both their attitude, their effectiveness, and also it will help them resolve, obviously, something that's going to be a large worry. In fact, we always take it a step further as well. As part of our workshops, all of which are free of charge, we offer also a free one-to-one guidance session. Now, in this guidance session, it's obviously a confidential one-to-one, oftentimes 30-minute phone call, or Zoom, or Teams, and essentially during that time, it allows people to ask questions perhaps they were reluctant to ask before. It allows them to really just take the time to digest what they heard in the workshop, bring it back, and then ask the questions that perhaps pertain to them. And not only this, it allows us to offer that bespoke approach I spoke about. Because really, truly, at the end of the day, any kind of work we do with clients, be they individuals, business owners, retirees, choose from the above, really, what we are doing is we're making a lifelong plan and working with a lifelong guide, such as myself, to ensure that they can hit their goals, stay on track for their plans, and for many people as well, it's just helping them figure out what their plans are. Now, Enver Wealth Management obviously is who I work for. We work with organizations. We do this on a regular basis. We're specialists in running these sort of programs. And what's really important is that we are aiming ultimately to improve the financial wellness and overall well-being of their employees. Because as both the employee and the employer, you both benefit. Be that in simply addressing their worries, setting up group private medical insurance schemes, for example. As someone who specializes in that, I oftentimes find myself working with both senior management, but also the kind of, lower level employees, and setting up private medical insurance in tiered structures. This is a good way oftentimes to entice and retain employees. Senior management oftentimes would like a bit more of a comprehensive package, and then for the employees, they can have a bit more of a basic package. All of these things, though, help retain employees and ultimately benefit you, the business owners. And then that's absolutely everything. Obviously, we do have some time for questions. I've finished a little bit earlier, which is always good. Before I do answer any questions, though, just want to quickly pop onto this slide here. On here is just a little bit about my details. Also a QR code that anyone online or anyone leaving now can quickly scan to book into my Calendly, even just for an initial 45-minute talk. Also on there are my details regarding any sort of email, phone number, so that really you can ask any questions that you may have had that you perhaps don't want to ask right now in front of anyone else. Thank you. And obviously any questions, I know we're going to have a mic going round to ask anything, but I'll let that go around. Thank you.
Hi, Josh. I've got a two-part question for you. Thank you very much for that. The first one is, what kind of protection is there for investors with yourself?
Right, so when it comes to any kind of protections working with St James's Place and companies such as ours, firstly, we are regulated by the FCA, which means that oftentimes we are, as the largest wealth managers in the country, we're oftentimes the first to implement any new changes, legislative or ethical, so that we are always ahead of the curve. And more importantly, any of your funds invested with us are still under the protection that is provided by the government, be it via the FSCS or any kind of legal financial ombudsman services. So you have all the same protections alongside something that's very unique to St James's Place, which is the SJP guarantee, which oftentimes just ensures that our advice is always suitable for you. Hope that makes sense.
Absolutely, yeah, thank you. And my other question, is how often will clients have their investments kind of reviewed, should I say? How many times?
That's the best part about it. As I said a little bit about that tailored approach. Some clients want to be seen once a year. They don't want to talk to you more than that. But oftentimes as well, clients take a bit more of a more active approach to their finances, be they want to speak on a more regular basis. Really, it's as simple as that. What we do is we can arrange, quarterly, some clients I meet, half yearly, or simply once every year to review whatever their circumstances are. And also, most importantly, our phone is always available to clients. So if they ever really want to talk, they're more than welcome to call us at any time, send us a text, send us an email, really. Hope that kind of answers that question as well. Anything else? Yeah.
Yeah, I've got a question, if that's okay.
Of course.
Obviously, I've been considering, the differences between critical illness cover or income protection. What would you advise? Would you advise, a bit of both, or one or the other? Or what do you think is the best for somebody in business like myself?
Perfect. Well, in the simplest way, this is how I would kind of measure that. So, first things first is that, firstly, it does depend on circumstances. I know it's a very kind of generic, cheesy answer, but let's say, critical illness may be tied specifically to something such as your mortgage, just so it's paid off, just so that God forbid you were to have a certain specified critical illness, your mortgage is paid off, you don't have to worry about that. Income protection is to cover your lifestyle so that you can maintain what you're living at now if you can no longer work your job. My personal recommendation is always the same. It doesn't have to be a one or the other. It can always be tailored and suited to you. So it could literally be as simple as the critical illness cover pays off your mortgage, and then you can get a lower income protection that takes into the fact that you will no longer have a mortgage. These are all things that can be tailored and suited to you as an individual. So my recommendation will be always on an individual basis, but better to have some protection than no protection, definitely. Cheers. Anyone else? Any other questions?
Hello, actually, I've got one. In your workshops, do you offer like pension reviews for multiple pensions within your workshops?
Yeah, so as a large part of our service, that is always obviously free as well, we offer what's called pension consolidation. So there isn't just pension consolidation as well, there's pension reviews. So the first thing we'll do is actually look at your pensions. We'll see what features there are, what your pension allows you to take in terms of flexibility, but also, more importantly, we can always help to sort of de-stress and declutter the entire process of your pensions. If there's a lot of pensions and you want them all in one place, that's something we can definitely do. Yeah, perfect.
Hello there. If there's something that I need a bit more clarity on, Josh, would it be okay to contact you after this?
Certainly. So hopefully all my details will still be on screen that you can watch back. Send me an email, give me a call, send me a text. I'm more than happy to answer anything you may have.
Thanks very much. Thanks.
No worries. And I believe that is, unless there's no one else, I think we're all good. Perfect. Thank you obviously all for coming. Appreciate your time. Have a lovely day. All the best.